Hello everyone and welcome back. My name is Greg Firman, market analyst here at TraderPlanet.com, and these are the market positions for March the 17th, 2010. Now our first position for tonight is going to be in feeder cattle. We can see here that we've had a very good, very strong move from VantagePoint. The crossover has actually taken place back in the beginning of December. We're still moving higher. Now, point of interest here, the crossover from VantagePoint took place at the 92.50 area. We've continued to move higher. We've now closed at 102.95 on the feeder cattle futures contract. So what we're going to do is we're going to continue to buy into this strength. We've got a very strong move here. Now the first thing we want to do is identify our pivot support, 101.97. 102.56 and 102.86, all of which are the 3, the 8, and the 18-day predicted moving average from VantagePoint. Now, with a move as strong as this, we're always looking for overbought and oversold territory to see if the market's going to reverse against us. But as it stands right now, I don't really see that happening. Now, we're going to go into our properties here. We're going to look at our short-term crossover here from VantagePoint and hit apply. We can see that the short-term crossover, a very volatile indicator. However, in the short term is a good indicator. We can see that this has crossed over to the upside yet again. The medium-term crossover, I don't think it's really required that I check this, but for the purpose of illustration, I'm going to do that. We can see that the medium-term crossover from VantagePoint, the predicted moving average, tried to cross the standard moving average and then bounced clear off of it. So what we're looking at here now is we're looking to see if it's all overbought or oversold. Very important that we identify that. We're going to start here with the predicted TSI from VantagePoint, the predicted true strength indicator. Point of interest again, this is VantagePoint's own indicator. We can see here that we are in heavily overbought territory. However, we're getting ready to cross over the trigger yet again from VantagePoint to the upside. So again, we're going to stick with our buy positions. Always important to stay with the trend. Now that we've identified that we are overbought, but we're getting ready for another crossover to the upside, we're actually going to look for entry points for tomorrow. We're going to be looking at the predicted low from VantagePoint and the predicted high. I think it's very important at this stage with the feeder cattle that we always take that profit, because again, we're at a very extremely high area here. So 102.77 is the low. That is going to be our entry point for tomorrow. We're going to be looking for a move to 103.31. We can see here that we've closed at 102.95. However, the neural index is pointing down. Now, the fact that the neural index is pointing down does not at all mean that we're in a trend reversal. We can see that the neural index has showed a 0 here on several other days. However, the trend has continued to move higher. We've now had a very high close, 102.95. So again, the neural index on a pullback towards this 102.77 area, that simply allows us to get into buy positions. So again, the advantage with the VantagePoint software is that we can wait and let the market come to us by identifying a key level of support, not just on the daily, but on the longer term outlook several days out. So with 102.77, the predicted low for tomorrow, we're now going to look at our pivot support areas. We have 102.86, 102.56, and 101.97. So in this particular trade, our stops are going to be, we're going to have our stops below the 101.80 area to make sure that we stay out of that intraday volatility and stay with this trend and allow this position to develop a little bit. Because again, we don't want to get knocked out prematurely by having a very tight stop. So if we were to enter at, for example, 102.77 at the recommended area, and then we had a stop at 102.40, and then we have the 18-day predicted moving average from VantagePoint sitting at 101.97, the market could go to 101.98 and then bounce all the way up to 102.70 or something in that area. And it's very important that we don't get caught up in that intraday stuff and we stay with the bigger move. So again, we're looking at buy positions on feeder cattle and on feeder cattle futures contracts. We're looking for 102.77 on a pullback to get into those buy positions. And again, all stops below the 101.80 area, just to make sure that if we have a little dip down, that we don't get those stops knocked out. So that is our first position for tomorrow. Now our second position for tomorrow, we're again going to revisit the S&P 500 contracts. Now again, the S&P has broke through a number of major resistance area. I want to point this out here. We can see in the 1145, 1150 area, we've had very substantial resistance in this area, and the S&P has taken this out. I've talked about this extensively, how I feel that the US stocks in general are very undervalued compared to some of the global markets. I believe that some of the tech sector in China and in those areas are actually overvalued. So again, we see some good value in those US based stocks, which all leads into strength into the S&P 500, the Dow Jones Industrial, the NASDAQ. All of these things come into play. So right now what we're going to do with the S&P 500 contracts, we're going to identify our pivot support area, 1129.24, 1144.07, and 1153.72 with the close of 1159.50. Now this is the highest close we've had in a very, very long time on the S&P 500. So we have to respect that the 3-day predicted moving average from VantagePoint is a very good entry point, 1153.72. Now let's go in and have a look at the daily report from VantagePoint so we can get our predicted highs and predicted lows for tomorrow, all of which are going to be very important to us. Now we can see here we've closed at 1159.50. I'm just going to back this down so everybody can see this. So 1154.16 and 1162.85 is the high for tomorrow. Neural index still pointing up. We are getting into somewhat overbought territory here, but again 1154.16 will be our focus. Now in the alternative to the 1154.16, again, traders that want to sit back a little bit, we've had the FOMC this week, a little bit of volatility. 1153.72 is in my opinion a very good entry point. Now again, stops would have to be below this 1129.24 area. That's a wide gap. I understand that, respect that. However, again, we're in a very good uptrend with the S&P 500, and of course we're going to have profit taking going into the end of the week, and we want to make sure that we don't get caught up in this intraday stuff, and our bigger picture is the S&P 500 is very clearly moving higher. Now again, we're going to go in, we're going to look at some of the additional indicators from VantagePoint, very important here. We're going to put in the predicted MACD and the predicted TSI respectively here to see what we can come up with. Predicted TSI from VantagePoint very clearly in overbought territory. Predicted MACD also in somewhat overbought territory, but again still extending higher. So I'm going to turn here and I'm going to add one more indicator, the predicted RSI from VantagePoint, also heavily overbought. Now even though you can see here that we've been overbought the entire month of March, and that has had absolutely zero effect on the uptrend here and essentially in the major crossovers from VantagePoint. Now again, going into the short-term crossover from VantagePoint and hitting apply, we can see very clearly that the short-term indicator is not crossing over to the downside. Very important to identify how important this simple indicator is, because even though the predicted TSI, the predicted MACD, and the predicted RSI are all warning us that we're in extremely overbought territory, the fact remains is these crossovers from VantagePoint, which is the primary basis of this system, have not crossed to the downside, suggesting that the S&P 500 in fact has plenty of room to extend much higher even from where it is. Now it's perfectly normal for traders to pick tops, pick bottoms, and things of this nature. Clearly that's not a wise choice in this case. I believe the S&P 500 should move towards that 1200 mark. So that's left to be seen, but for now I want to make it very clear that we buy on dips. That's key to success in trading here. So again, we're likely to see a pullback towards the end of the week because we're in overbought territory and because we're going to have traders looking to take profit. But the reality is we're likely to extend higher on the S&P 500 futures contracts, which translates into strength in the NASDAQ, in the Dow Jones Industrial, and a number of other global indices. So those are the market positions for March the 17th, 2010. And again, my name is Greg Firman, market analyst here at TraderPlanet.com.